Good morning. This is Sarah Hartnett from In Accountancy, and today I wanted to jump on here and just share with you my top 10 tips, or certainly top tips to make sure that you get your tax return done on time and correctly if you haven't yet done it. So at time of recording, we're approaching the filing deadline of 31st of January 2023. It's the 18th today, which means that you have, 13 actual days, but only about 10 or so working days between now and that filing deadline. So what do you need to do to make sure it happens? Well, first and foremost, stop panicking. If you are indeed panicking, you still have time, and really it will help you if you've got some structure behind what you're doing. So here's what I'd suggest to get yourself really, really organised and be able to fly through this quickly. So just make sure, first and foremost, make sure you've got everything to hand before you start. If you have to you can save things within HMRC's personal tax account where you complete your return. But actually, my experience would suggest the more you have to come in and out and go back and multitask doing different things, the longer it's likely to take and the more likely you are to make a mistake. So get everything together in front of you before you start. So what is everything that you need? Well, you can refer back to that earlier video I did in 2017, I think it was, of how to submit your tax return for a lot more detail on this. But just very slowly, or very slowly, just very quickly, the things that I'd suggest you do is have your personal tax account open. If you don't have one yet, I will drop a link in the comments here so that you know how to open your personal tax account. Know your UTR. Again, if you don't have your UTR, apply for a personal tax account with HMRC, and you will be able to apply for your UTR through that and register for self-assessment. Then get all of your account details, so your business income and expenditure, income from any other income streams, if you've got property or if you've got dividends, for example. Make sure you've got all of that to hand. Make sure you've got your bank details to hand so you can be ready to make the payment as well. Find and make a note of any other business related expenses that don't necessarily sit inside of your accounts, so that aren't maybe cost of goods or overheads, but are things like use of home allowance, like mileage, expenditure, mobile phones, anything like that you can run through the business, but maybe aren't in the day-to-day accounting. Then you'll also need details of any income, interest income you've received over the course of the year, and especially if you're a higher rate taxpayer, details of any gifted donations that you may have made throughout the year. And that includes, of course, memberships like the National Trust and places like that. So with that in mind, the next thing that you need to do is understand what qualifies as a business expense. So we touched on this above a little bit, but basically a business expense is anything that you use in the running of your business, in the day-to-day running. So goods that you buy in order to sell on, or to adapt and personalize before you sell them on, or cost of goods, so goods that you buy in order to manufacture or prepare what you will ultimately sell on. Your website costs, any marketing costs, any networking events that you might be attending, your business travel, of course, IT equipment. So if you've got a laptop, a mobile phone, and that you're using to record videos, for example, and of course any of those licenses like this for StreamYard or LinkedIn Premium, things like that you might be using. It gets a little bit more challenging to think about what is definitely a business expense and what isn't if you're in the area maybe of personal branding, because HMRC's rules are quite tight on this, and there's a lot of precedents and case law to let you know what is and isn't allowable. And it's a little bit of a grey area as well. So for certain people, some things might be allowed, whereas they're not for others. I've written an article on this specifically, so again, I'll pop a link to that in the comments, which you might find useful. The litmus test, the thing to remember really is that HMRC's remit says that in order for an expense to be fully tax deductible, it must be used wholly and exclusively for business needs, if that makes sense. So what else? What if you can't find a specific receipt or invoice? So there are two things to think about here. If this is just for your self-assessment tax return, you're a sole trader, excuse me, the key words to remember there is it is self-assessment. Therefore, as long as you are confident and sure in the knowledge that you bought this item and it was used for the business, then yes, you can claim for that regardless of whether you have a receipt or not. You just need to be aware that should HMRC investigate you and ask the questions, that you need to be able to show some sort of evidence or proof, or you might be challenged and you may have to repay any tax that you'd saved against that. So keep good records going forward is always a good rule of thumb. If, however, you're VAT registered and this is relating to an end of year VAT return, then I hope you do know that you do need to have a VAT receipt in order to be able to claim the VAT back. So if you can't have a receipt, you can still claim it, but take good notes, keep good evidence, keep a good trail of records. Dates. Know the dates that this relates to. So the tax return with the filing deadline at the end of January is for the year which finished the 5th of April in the previous calendar year. So right now, January 2023, the year we're looking at is the 6th of April 2021 to the 5th of April 2022. Now we've only got a couple of months left of this current 22-23 tax year, and if you are being last minute this year, I'd really encourage you to, as you're getting things together, to separate out everything you're going to need for next year's at the same time so that you can get that done a little bit more quickly next time. So dates, we've talked about how to pay. So again, the filing deadline for completion, submission and filing of your self-assessment tax return is the 31st of January. But HMRC also want any liability to be paid and received in their bank account with the correct reference codes by the 31st of January. So in reality, that means that you need to, if you're paying by bank transfer, you potentially need to pay 3 days ahead of that. So 27th, 28th is your last opportunity. Let's think the 31st this year is going to be on a Tuesday. So actually the Friday before, so that's the 27th, is probably your last opportunity to file if you're going to pay by bank transfer. If you're going to pay by direct debit and you haven't done so before, they need at least 5 days for that to clear in the bank. So you'd need to be filing, submitting by 24th, 25th latest. I'd bring that back a little further because you don't always necessarily know your exact liability until you've submitted your tax return and everything has been processed through to account for payments on account and any other interim payments you might have made. So really, bring that back. You've got a couple of days to get this done and done right. So you can pay in any number of ways, like I've just mentioned. Penalties if you miss this filing deadline. So if you happen to miss this 31st of January filing deadline and don't submit it until the 1st of February, you'll have a £100 fine. Now that £100 fine is on anything from 1 day late to up to 3 months late. Once you go over 3 months late, then and less than 6 months late, then you get additional penalties of £10 per day for each time it's late. And that's over a 90-day period, so a maximum of £900 there in terms of penalties on top of the £100 for the first 3-month period that you're late. Again, if you go over 6 months late, then you get another penalty, which will be the greater of either the 5%, I think, of the tax due, or £300, whichever is greater. When 12 months late, you get a further penalty like that I've just mentioned, the 5% or £300, whichever is greater. Plus, you may also be requested to, or be forced to pay up to 100% of the tax due on top of the penalties if you are a repeat offender or have no reasonable excuse with HMRC. Now, that's penalties for late submission and late filing. What about late payment? So if you file on time but you don't pay on time, there actually aren't any penalties, so to speak, but you will be charged interest. Now, interest went up on the 6th of January 2023 to 6%, and that would accrue daily. So any late payments, you will accrue interest, and that will be charged on top. If you get penalties for late filing, you will also pay interest on the penalties. So it really can mount up quite quickly. Let me think about anything else we get asked. If you don't have your UTR, so that's your unique taxpayer's reference code, that is probably because you did not register before the registration deadline of the 31st of October last year. So you may have a penalty for late submission or late registration. You won't get a late filing penalty because the actual rules around self-assessment are that you must file within 3 months of receiving your UTR or the 31st of January deadline. So you've still got time if you haven't got your UTR yet. That's absolutely fine. However, if you do owe any tax, that tax is still due to be paid over to HMRC by the 31st of January. So regardless of the fact that you can't submit your tax return and therefore you can't pay your tax because you need your UTR as your payment reference. So regardless of that, you're going to have to, you may be charged interest on any late payment over that period. If for any reason you can't pay, then talk to HMRC. Now, HMRC are quite good at giving time to pay arrangements. Again, there will be interest charged, but they would much rather know that you can't pay and arrange a payment plan with you than start chasing you and start sending debt collection paperwork and people indeed to come collect what they're owed. If you have if your tax liability is less than £30,000, you can usually do this time to pay arrangement online very, very simply. So I'd encourage you to look there. And again, I'll pop another link to how to do that in the comments. If you've got a tax liability less than £3,000 and you're in employment, it may be that if you submit your tax return before the end of December, you can have that tax taken in your tax code throughout the following year. But as we record this, you're too late for that at the moment, but something to think about perhaps for next year if you're in employment also. Anything else you need to think about? Payments on account. The main reason, in my opinion, for getting things done quickly is to know how much you're going to owe HMRC. So if this is your first year, or it's the first year that your business is taken off and your tax liability is going to be greater than £1,000 for the year that has passed, HMRC will want you to pay next year's predicted tax in advance. So this year, not only would you have a £1,000 tax liability for the year to 5th of April 2022, they would want you to pay 50% of next year's tax return, so for the year to April 2023, in advance. So you would pay, in this instance, £1,000 plus £500, and then in July you'd pay another £500, so you are up to date, and that would keep rolling for as long as you are subject to self-assessment tax. You can apply to reduce your payments on account if you've had a particularly strong year and you know it's not going to be as good in the following year. But the risk in doing that is that you could also be charged interest if your business performs better than you anticipate. So again, just all good reasons to get ahead of the game and keep on top of things. I hope that was useful. I hope that's answered most of your questions. As usual, if you like this, please give us a like, a comment, a thumbs up, share with anybody else you think would find it useful, and refer back to some of our other videos. There are various on personal tax, as well as payments on account, and lots of different business tax and advisory type videos on YouTube. So I'll put links to all of the resources and all of the ways you can contact or find us in the description and the comments. I hope it's been useful. It's Sarah Harkness from In Accountancy, and I look forward to hearing from you all very soon. Bye for now.